Hey everyone, Chris Versace here. It is Tuesday, September 30th, last day of September, last day of the current quarter. And you just have to say it, it has been quite the year so far. And we still have about 3 months to go until we close out 2025. Hard to believe. But if you look at the table below, what's not hard to believe? Well, it's the performance of some of our thematic and target exposure models. Again, take a look at the table below. You will see what I mean. As we close out the quarter, which has been a good one not only for the market, but again, as you can see in that table below for our models, we are barreling closer towards a US federal government shutdown, which goes into effect midnight tonight. In the past, the stock market's been relatively unfazed, subject to the duration of the shutdown. But in terms of the economy, if we look back, the 34-day partial government shutdown in 2018-2019 reduced annualized real GDP by about 0.4% in the first quarter of 2019. Going back a little further to 2013, a full shutdown like the one we had back then that was around 16 days, that lowered annualized growth by as much as 0.6%. But here's the good news. Generally speaking, the economy tends to make up for any lost growth in a shutdown once the federal government reopens. One area that may not be quite the case is travel and tourism. And we have the U.S. Travel Association warning that the travel economy could lose about $1 billion every week in a shutdown. That simply reminds us that even if we do get a government shutdown, the big question is going to be what is the duration? How long does it take for both sides to come to a deal to reopen the federal government? And then, of course, for how long? But what's potentially different this time around, Trump's threats of mass federal layoffs. And yeah, they could leave a lasting mark. Why? Well, furloughed and RIFT employees may be nervous, they may be hesitant to spend as we head into the all-important holiday shopping season. That could be, as we like to say, a big headwind for retailers. But before we get out of ourselves, we'll need to see if that is a Trump negotiating tactic to get Democrats to the table or something more. Now, as we think about the shutdown from an investor perspective, if it happens, it does mean that we are going to be lacking economic data and other government statistics. And what makes it a little more challenging this time around is that there are a lot of questions about what's unfolding in the economy. You take a look at the Atlanta Fed GDP model, it's been revised to 3.9% for the current quarter. The New York Fed nowcasting model been revised up to 2.5% for the second half of the year. Now, there are a lot of positive data points that have allowed those revisions. There's some areas of weakness, the housing market, for example. There's also questions over the employment market. And here's the thing, if we get a government shutdown, the Bureau of Labor Statistics has already shared that it will not be publishing the September employment report on Friday. As we think about that, why is this important? Well, we know that the Fed is kind of angling potentially towards an incrementally dovish or less restrictive monetary policy, but as Fed Chair Powell has said, they will continue to follow the data. We also know that there's some questions inside the FOMC about the number of rate cuts that should be delivered between now and the end of the year. We vocally heard some Fed heads saying that it could be one rate cut. The updated set of economic projections says two, but again, as the Fed has said, these are not forecasts. These are best guesses based on the data at the time, which of course means we as investors need to follow the data. Issue being, if we get a government shutdown, what data will we be getting to do that? Certainly not the employment report. And of course, that is a big area of concern for the Fed currently, given its dual mandate. We can trace that back to the recently weak monthly employment reports, as well as the big revision for the 12 months ending in March. But what does it mean? It means that if we do get a government shutdown, folks like us, we will need to be paying even more attention to the other data that we are getting. That means the monthly employment reports from ADP. It means really digging into the manufacturing and service PMI reports from S&P Global and ISM. They tell us a treasure trove of information on the pace of those two sides of the economy. New order growth, which is a leading indicator as far as we're concerned, but also for employment and, yes, of course, inflation. Let's remember, too, that when the government is closed, there is no data collection. So it is going to call into question the data that we will get when the federal government eventually reopens. For us, it simply means that we are going to continue to do what we do, which is triangulate across a wide array of data points and signals to determine what is really going on in the economy and the larger world around us. Now, as we sit here and game all this out, we realize that we could have much greater clarity on all of this in the next 24 hours or not. We'll simply have to see what unfolds in Washington. But again, one of the things that we will be doing here at Tematica is continuing to follow the signals that are constantly unfolding around us in and around our daily lives when it comes to our thematic and targeted exposure strategies. That's going to include listening to what Amazon and Google have to say today and tomorrow about their new hardware and how they're baking their AI efforts into those new products. We're also going to have earnings from Nike, Lamb Weston, ConAgra, and a few others. And we'll be reading into those tea leaves as we get ready for the onslaught, better known as the September quarter earnings season that is right around the corner. We're also pretty interested in ChatGPT's move to allow users in the US to make purchases directly through ChatGPT using a new instant checkout feature that's powered with Stripe. This is an interesting tie-up, especially as expectations are Stripe will go public. We're going to have a lot more to say and share about all of those data points, learnings, and those events, as well as other signals later in the week. And hopefully when we do, folks, we will have, greater clarity on what's happening in Washington. So we will be checking in with you later in this week. Be sure to check back as a result, and we'll have a lot more to say. Thanks for watching.